Right, a quick update on what we have going on with our current positions in the market. We did make a three-part series on gold. We did a part one breakdown before we entered any positions on gold, explaining to you why we were looking at gold the way we were looking at it, and our our ways of taking part in both the buys and the sells. Although we had a strong sell bias looking at what was presenting from the technicals at the moment and from the fundamentals and from order flow and liquidity zones. Then we analyzed the flow, of course, and we established we were still in a bullish trend on the 4 hour time frame with respect to gold. But in the part two series of the gold breakdown, I did share to you with you guys Euro USDJPY. Just before the end of the video, I told you one of the other interesting pairs to be looking out for this week is USDJPY, and I explained to you guys why, because we were overextended to the downside, and it was just a matter of time before price whipped cleared this corrective leg, which was this today, and I had my first POI here, and I said join on the way up. That's what I put in my video, saying I would not set a limit order right here. Because if I set a limit order, lo and behold, it would have gotten squashed right there because my stop would have been hit looking at this order right here. But I said what? I'll set a buy stop when price hits the zone and gets on its way back, because I knew this was not the strongest supply demand zone rather. So we did manage to secure a 5% on this one, looking at the fact that we had heavy momentum coming into the market, so we were looking to collapse. This trade, just after taking liquidity that was lying above this zone, eco highs, was about one touch, two touch, three touch, four touch. We can call it a double, triple top. It doesn't really matter. We had a lot of pending orders there and stops that were trod to that point. So there was a lot of liquidity for the market to grab to continue going downwards. But I had another POI down there, so I did set an alert right here, and when the alert was triggered, I came to the chart and I started observing price. So we came here, then on the 1 minute, sorry about that, guys. Um, on the 1 minute, after hitting this supply zone, right, this black line right here, this is my demand zone. So when we hit this zone, we came into this zone, went up, came back in the zone, cleared these equal lows, went above, broke structure. That was not enough, it was minus structure, but it was an indication. Came back to retest something down there, went all the way up, broke this structure again, broke the supply zone right here, came back for a retracement, went a bit higher, came back down, created equal lows right here. Let me highlight those for you. So it was leaving clues, it kept leaving clues behind, say it was going to go, it was going to come back right there. So I saw that and I knew these will have to eventually get liquidated. They did get liquidated right here and tapped my demand zone. I believe this is 1846.8, and this candle has its low at 46 at 8108 for 46.8. Yeah, it did tap it exactly to the peep, right? Then from there we saw it rally to the upside, breaking structure here, breaking this structure here, breaking structure here, but acted off of this supply zone right here and melted back to the downside. So now in here, if you're a Wyckoff trader, you can be seeing the schematic being formed right here. We have the selling climax, uh, test phase A, test phase B, however you choose to look at it. What I consider most important is breaker structure and how the order flow is being marked up. We already established our bullish buyers. If you look at how, if you look at the higher time frame, this is 1 minute time frame, so don't get it confused with seeing this downtrend right here. This was where we got overextended to the downside, and I said we're gonna see market rally to the upside. So after I saw this, from here I knew this zone was not fully tested yet, so I knew market was gonna either come and act off of this zone. So these were the possibilities, right? So So you could have taken that as your play, just exactly there, right? But it would have tapped your, it would have triggered your stop loss. It would have been a dumb idea to put your stop loss immediately there, so you spare a few pips to account for spread and whatnot. But in the buy, spread doesn't really affect your buy positions. So you could have had that. Let me give it a slightly different color so we can differentiate between the two. Let's say, so you had that IPY above. So looking at this one, which was barely tested, not even the 50%, I wouldn't be setting an order right here. So I did put mine right there, and it did come and wake me in. And from there, as price tagged us along, this is a position I shared. If you check the part 2 of the gold analysis, so we came broke structure to the upside, broke structure to the upside, and finally broke this point here. We showed our sign of strength right there, came back to test something the kissing uh wickless candles. Sorry. Then we went all the way up, so we had a rally, base rally. So we came back to test the base. Now, why did I put another order right here? Look at the way we were coming to the downside. Look at the way we came to retest it. We formed a trend line and a descending channel rather. And the descending channel, if you're a pattern trader, is a bullish, a sign for bullish momentum. So I knew it was just a matter of time. So I needed an IPOI to act off of. And if you look at everything closely, it's this one right here, and it did count to that zone perfectly, and I had my stop right there. So on this one, we did manage to lock in 20% on this trade, 15% on this trade. Then when we locked in this trade, went above, came back to retest something here. We had already moved it to break even immediately after it broke this high here. Sorry guys. We trudged up to break even here. My stop was right here, securing in and around, sorry, uh, 9%. So then price came, broke this high right here. I trailed my stop down there, securing 15% on this one, and about, I would say, 4% on this one, or 2%. So we broke above this one, and again, what did we see? Another descending channel. So we knew it was a bullish sign. And order flow wise, guys, look at how we were positioned. We had a lot of people selling it. And what does the market do? It goes against what the majority of retail traders are doing, because 90% of retail traders, or I would say majority of retail traders, may not be 90%, maybe 70%, but it doesn't really matter, because if most of retail traders are selling, who's buying from them? It's the banks, because somebody has to hold the other end of the transaction. And we saw only 30% of retail traders were buying. So who was buying the other chunk? It's of course the banks, and the banks are not interested in anything unless they're gonna make money out of it. So they were buying the majority of this. And what is representative on the chart is what the banks are doing. So banks were using the shorts as liquidity to keep hitting these highs and collecting liquidity to push the market even higher. So when I saw that, it was just a matter of looking for an IPO, and you can see it. So from here, we rallied all the way up. Others will claim this is the one, but I'll tell you this is the one. You can go with this one, it will get tagged, but to be honest, this is the zone if you're looking to play. So price came, tapped it, went up, acted above the supply zone, came back, tapped, then went up, wicked above, right there. And that was the indication that we were strong. And immediately after I saw that weak formation, I placed my pending order right here. And the market did come in the zone. If you want, you could have put it exactly there, but sometimes those things are gonna make you miss trades. But for sure, I knew it was gonna come and hit this candle. Okay, so it did come there and go all the way up. So for those of you who are a bit conservative on your stops, you'll have had your stop right there. But I was a bit conservative, and this was the best trade of all of them. So when we moved here and broke this high, I moved my low right there, securing 20% on the first trade, close to 20% on the first trade because I had a 1 pip stop loss. So whatever is showing this side is almost representative of the percentage. So it's about 10% being locked in, on this one about 5%, and the new one is running about 1%. Then we went, broke the structure, went, and the moment we tapped there, all these positions got closed themselves. So this was a 46 pip move. So I have all these positions closed. So what can you be looking for on this pair going forward? So now here is the next opportunity. The next opportunity on this pair lies right here. From here, you could be looking to buy. Now, don't sit depending on them blindly right here and be looking to catch the move to the upside. No. Observe what price is gonna do when it gets to this zone. You can set a limit order or an alert rather, then watch time price on the say 1 minute time frame when it gets to this zone. Is price still impulsive? If it does form something like this, comes may come impulsive, then does something like that, creates liquidity, grabs it, tries to go up, comes down in an ascending way, tests all the blocks down there, shows you the first sign of strength, comes for the last point of supply, and continues to go up, does something crazy, continue to go up, does something crazy, continue to go up, does something crazy. Then you can be looking to join right there, in there, there, or eventually, if you're alert enough, there. So up to you, but whether you join here or there, you can choose to use the method I used today where you just say, you know what, feel join me in on the trade on the move to the upside. Then you set a buy stop so it tags you in, comes for a retest, and you go. However you choose to do that is entirely up to you. Now, another pair that is looking so good for the week, I believe, was GBP JPY. So on GBP JPY, I was looking to get involved in around here. You see why sometimes I don't just blindly, enter trades off of some of these zones, right? So you have your supply arguably right there. Sometimes you won't always mark them perfectly. You may miss a few details here and there, but if you have a general picture saying this is an interest zone for me and I'm looking to see what price does here, so it came impulsively. Of course, I couldn't set a pending order. Look at how heavy this is. This is trading against flow. Then the moment it taps into something, it bounces all the way up and comes back correctively compared to this leg, then I know it's gonna fly. Breaks this high, breaks that high, comes for a retest there. You're looking to get involved, break this high, comes back for a retest right here. Looking to get involved. So, let me show you. So breaks this high, you're looking to get involved somewhere there. Breaks this high and you're looking to get involved somewhere there, and that could have been your trade today. As small as this trade looks, it's a really profitable trade. With your stop just a few pips below that, targeting to break these highs and this high. That's a 4% on capital. It's a lot depending on how, if you want to know. If you reach 2%, that's 8%. Others have a bigger risk appetite. They risk 5% per trade. So if you risk 5%, that's 20%, and so on. I also risk more on really good trades like this one. Like Here I went in, I risked 1%. Here I did risk 1% as well, but on this one I put in 3% because now there was no need for me now to put in 3%. I had already made 15%, so risking 3% was nothing. I was gonna collapse at 12% and did at 12%. So 3%, do the math, yeah, 27%. That everything together was about 60% growth in capital. And as you all know, I trade FTMO, $100,000 account. So yeah, today was a really good day. We made 1,000 US dollars. And the month is almost over, and we're ending it on a really, really, really positive note here on Jobs Capital. And you guys can do the same thing as well. Others will be looking at this, but this didn't do nothing. It's this one that broke supply here, then formed a best and rallied all the way up. You can be looking at the momentum coming in there, but it will mislead you. So that's it. I think we have the same situation panning out here. So you can see also something goes up. I don't like the fact that it's forming a falling head, but eventually this may turn out to be some sort of a flag. Maybe that's that. Goes for the third touch. Maybe drops impulsively liquidating all those things. Maybe there's an important block you want to tap right here, then goes all the way up. Let me remove drawings, and that's it, guys. See you later. See you next week, or see you tomorrow for another update and see what we'll be looking at. For now, I have nothing in particular. I'm not supporting any good ideas at the moment, so I'll be staying back. It's been long since I checked Bitcoin. Don't know what Bitcoin is all about these days, but for the Bitcoin lovers, let me do a quick one for you. You guys can see there goes my supply zone. Look for liquidity grab candle. You can see this is something I had written a long time ago. So if I come here, you can see these relatively equal lows, and my liquidity grab candle is right here. This is candle over here. So from this candle, and more often than not, you want to be buying Bitcoin more than you want to be shorting it. So yeah, it comes here, goes all the way up, comes back down to test now this one. And depending on how confident you are in your strategy, this is how this trade was designed. This is a supply zone. Your stop could have been just below this point right here, but I would have been a bit conservative, right? Considering the fact that we didn't test 50% of that, and you'll be floating around 4%, targeting the highs to give you about 7%. So that's Bitcoin. I didn't have a look at it, so I didn't know it was presenting a really good opportunity. But this note right here is really important. Look for the liquidity grab candle. Here, get the liquidity grab candle, it gets liquidated, goes all the way up. New liquidity grab candle right here, new block, it comes tested and went all the way up. This is the last Bitcoin trade I took before this one, the last buy, 14%, and my last sell, 14%. Additively, 28%. Then this one was a quick good trade, 60%. It was a flip flop. I did get triggered in, but broke even, and that's Bitcoin. But if you look at it closely, you have this leg, then whatever it's doing here. So we have your major leg, minor leg, and whatnot. Let me just remove all drawings and analyze it a bit better for you guys. So previous higher high, higher low, higher high. You can considerably say this is your higher high, higher low, sorry, which got triggered, raising flags. But if you analyze the leg properly, you find that it may not be the lower low. But thank you guys. See you later. See you tomorrow. Probably make another video tomorrow.